And welcome back to the Halftime Report. I'm Bob Pisani. Time for ETF Edge. Stocks making a comeback today after a rough time last week. Where is this action taking us? Joining us now, Jeff Kilburg, KKM Financial, Jeremy Schwartz, Global Head of Research at Wisdomtree. Jeff, the market leaders this year are defensive sectors, utilities, long-term Treasury bond ETFs are leading, both up 7% for the year. Will that not change, Jeff, if the coronavirus turns out to be less of a threat than expected?
Well, I think you're absolutely right if we do see expectations diminish. But by and large, we have seen utilities as well as treasuries. Look at treasuries, Bob. This is the 125th consecutive trading day that the 10-year note has been under 2%. So right here at 1.53, you've seen a lot of buyers into TLT. If we go over to utilities, there's been a lot of assets being attracted there. And if you take a chart, Bob, a 3-year chart of utilities in comparison to the S&P 500, they're about the same. You have seen a long-term attraction in this search for yield, this global search for yield. That's why utilities, I think, will still be intact despite the fact we see expectations diminish.
So your point is that this is not just a coronavirus story. We've seen relative strength in utilities, in fact, for a year now, essentially, and bonds as well.
That's right. And I think you continue to see assets check. Why? In the last 2 weeks, you just saw $3 trillion go back into negative yields. The German Bund at minus 43 bips. I think this really speaks to the fact that, yes, we're at near all-time highs in the S&P 500, but you still see people looking for yield.
All right, Jeremy, you think utilities are expensive. I would agree with you on that theory. But investors should look for what? Dividend-yielding stocks at this point.
You know, for sure, this bid for yield safety has pushed up all the defensive, low-volatility sectors to, I think, higher valuations. We look at utilities as one of these above-average yielding sectors. If you look at all the dividend pairs, we have an index, the Wisdomtree Total Dividend Index, 1,500 stocks. The average yield is the same as utilities today, 3% for utilities, 3% for all the dividend pairs. But where utilities are issuing shares to fund their growth, sort of 2% issuance, the average company is buying back 2%. So you get a 5% total dividend buybacks versus like a 1%. So, and on a P multiple basis, it's 4 multiples cheaper.
And higher dividend stocks generally have lower volatility than the rest of the market, and they often pay higher yields than bonds. I've never quite, that seems like an obvious play if you're interested in yield at this point.
I mean, the average dividend-paying stock is twice the yield of the 10-year bond, and it's got better taxation. Right. Very different volatility levels, but I think the growth profile is there for the average.
In theory, though, Bob, you have to realize what you're actually getting price movement versus actually the yield you're receiving in some of those stocks.
I'm looking at risk-adjusted returns because that's what people remember. This was a low volatility. It was the big rally last year, and people were looking for risk-adjusted returns. They just wanted less volatility in their portfolio. You're trying to deliver some new ETFs out there, some new model portfolios that are going to address that with Jeremy Siegel.
Yeah, we're going to talk a little bit more about this. This idea with yield so low and people living longer, is the 60-40 going to get it done? And we think it's not. There's just not enough income. As people are aging, the 10-year TIPS yield is negative. You're being forced to take more equity risk if you want to solve for longevity risk.
And you're going to live a lot longer. 90 years old, an average person 65 plus is going to live so far today. You're going to have to look into ways to preserve your capital. Jeff and Jeremy, thanks very much for joining me. More ETF Edge. Don't go away. Our live show goes online, 1 p.m. Eastern Time sharp. We'll be speaking with Wharton's Jeremy Siegel about his partnership with Wisdomtree. You won't want to miss out on that one.